Good day. Thank you for joining us. My name is Anda. Today we'll look at AbbVie as well as Roche following their first quarter results for FY22. In terms of our agenda, we'll look at the executive summary and then we move to the event as well as the impact. We'll also look at the pipeline trajectory, which informs our valuations on the counters. Lastly, we'll look at the peer comparison for all the global pharma stocks that we have on our coverage. Starting off with the executive summary, we were encouraged by the recovery that we're seeing across all the divisions as we're coming off COVID pandemic. So we're seeing recoveries in medical devices, consumer division, as well as pharma division. Secondly, we're also encouraged by the corporate activity that we're seeing across these counters. For instance, there's an M&A activity happening in Johnson & Johnson, as well as Pfizer. For AbbVie, we're encouraged by the pipeline renewal that we're seeing. In terms of risks, price reforms, they are no longer a short-term risk, and this is because now they are tabled for 2023 and they would come into effect in 2025, which would then make them a medium-term risk for our global pharma stocks. This is especially important given that most of these counters have originator drugs and they would then be more affected by price reforms, especially in the US. Loss of exclusivity as well as biosimilars competition remains a key risk in the sector. In terms of our sector preferences, we have a preference for AbbVie, and this is on the back of their strong organic growth, which we'll show later on in the presentation. We are bearish on Roche, and this is because of their limited pipeline. And we'll speak to this in the later slides. Now, starting off with AbbVie, they released their results on the 29th of April. That was their first quarter results. The key takeaways were their revenue was up 4.1%, and this was driven by strong growth in Skyrizi as well as Rinvoq. It's important that we note these drugs as they are meant to replace Humira, which is coming off LOE. In the US, it did well, but it declined outside the US by 22%. Overall, at a group level, it declined by 2.7% in this quarter. The company also declared a dividend of 141 cents, which was an increase of 10.2 year on year. Overall, the diluted EPS increased by 9.3% to arrive at 3.2 USD. Now, if we look at how the market reacted to these results, the share price closed down 6% on the day, and this was because of a miss for Rinvoq in terms of consensus. So the market then punished the company on that basis. But if we look at how the company has performed since our last report, which was in November 2020, it's been up 40.5%. While the Dow Jones has been down at 10.0% on the same period. On an earnings basis, the EPS have been on an upward trend for the full year 2022 as management has guided for solid growth. This will be driven by key franchises, which we'll look at in the following slide. So in this slide, we're just showing the key drugs and the growth that's expected at a group level, but also at an individual indication level. So net for net, we're expecting sales growth to be around 7% for FY22, which would bring us to compound growth rate of 13% in terms of the 5-year average. EBITDA is expected to grow at around 17%, which would bring us to a 5-year growth rate of 16%. Lastly, the EPS growth is expected to be around 12%. We also want to highlight the Humira LOE, which will kick in FY23. For now, we're expecting to see a decline in terms of sales growth as well as EBITDA growth. But should Rinvoq as well as Skyrizi do well, these numbers will change. From the recent readouts on Rinvoq, it looks like they actually have improved their efficacy for the same disease that Humira was treating, which is a Crohn's disease. So we might have to update these numbers in the first half results. In terms of valuations, we value the company at a weighted intrinsic value of $179 USD, which then gives us a potential upside of 22%. In terms of the assumptions, we valued it using their 5-year EV/EBITDA multiple of 11.4 times. But for the bear and bull case scenario, we look at the lowest multiple that the company had when it faced LOEs, which was 9.6 times. And then for the bull case scenario, this is where we're expecting the Skyrizi as well as Rinvoq to substitute the Humira that's coming off LOE. So net for net, the weighting is 50% for the base case scenario and 30% for the bull case scenario, which we think is justified given that we've had positive readouts for Rinvoq as a substitute for Humira. Now moving on to Roche. The company also released their first quarter results on the 25th of April. The key takeaways were the sales growth was up 10.1%, and this was mainly because of diagnostics division, which benefited from COVID test. That division was up 22.1% year on year, with pharma division growing at 5.3%. This is because it faced a couple of LOEs, so that's Esprit as well as Esprit, Avastin as well as Herceptin. So those drugs are facing LOEs, and they are starting to decline in terms of revenue growth. The company also maintained their full year guidance at they're expecting low single digits for both revenue as well as EBITDA. If we look at how the market reacted to these results, the share price closed down 1.2% on the day, and this was because of the LOEs. The market was disappointed by that. But I think another thing to highlight here is that Novartis has landed a generic drug which will compete directly with Esprit, so it will fast track that LOE that we're expecting in FY23. In terms of the sales trajectory or drug trajectory rather, we're expecting sales growth to come in at around 2% for the year, and EBITDA growth is expected to be around 3%, which will also give us an EPS growth of around 3%. And then in terms of valuations, so for the base case scenario, again here we've assumed a 10.5 times multiple, which is a 5-year historical multiple, EV/EBITDA multiple for the company. We've also our base case scenario, that is one standard deviation away from the mean, and it's at around 9.7 times, and the bull case is at around 9.4 times, which is one standard deviation above from the mean. In terms of when we'd see the bull case scenario is if we start seeing good readouts from the phase 3 readings for the lung drug that the company is currently working on. Net for net, our valuation on the stock is at around 307 Swiss franc, which gives us a potential downside of around 15.5%. Lastly, we look at the peer comparison. Here we look at all the companies that we have in the global pharma space, that is AbbVie, Pfizer, Johnson & Johnson, as well as Roche. Just if we're looking at the two companies, which is AbbVie and Roche, we can see clearly fundamentally AbbVie has done very well compared to Roche, that is in terms of revenue, EBITDA, EPS, as well as the returns, that is your ROE. We also look at R&D as a percentage of revenue, just to see if these companies are spending towards renewing the pipeline. And what's clear here is that the companies that are under coverage have been spending towards their R&D. It just so happened that for Roche, they've had a lot of disappointments, where studies had done well in phase 2, but then when it comes to phase 3, the results are disappointing. So that's really bearish on the counter. Before we close off, we'd like to draw your attention to the following personnel should you wish to place a trade with us. Lastly, please take note of the following disclaimer. Thank you for your time.